Come on. All right. Hey, welcome everybody. Welcome. This is Mike Patel with Home Savvy Central. I'll give a few minutes to get people going. I'm going to turn on Instagram to go live on Instagram here. There you go. And I'm going to turn off the music so I can hear everybody. All right. Can you hear me? Kevin, can you hear me?
Yeah, I can hear you.
Okay, cool. Let me see. I want to make sure that people can hear me. Okay, there you go. All right. Hey, welcome everybody. I'm Mike Patel. As usual, I'm very excited to bring you some new topics today. Nothing is new in real estate. They're very repetitive, but you don't know when that's happening. And that's exactly what we're going to talk about. Real estate goes up and down. People can afford to buy it. People cannot afford to buy it. Sellers want to sell high. Sometimes they have to sell low. So it's a vicious, repetitive cycle. The bad thing is we don't know when it's going to be high and when it's going to be low. So we have a topic, and the topic is home values are crashing in half of the USA. Wow, only half. That means half are struggling and half are not. And we'll let you know which half is struggling and which half is not. Hopefully, if you're thinking about selling, your half is not struggling. And hopefully, if you're thinking about buying, hopefully your half is struggling so you can get a deal. But today, I have a special guest with me, Kevin Wells from First Team Real Estate. Hey, Kevin, take a few seconds. Tell us about yourself.
Hi. Well, my name is Kevin Wells. I'm with First Team Real Estate. And I was on the show. How long ago was I on the show?
About a year, almost a year.
Almost a year ago.
7-8 months, right?
So I've had a lot of experience in this market. And actually, it's a little double talking.
Yeah, I think so. There's something coming in there. You have two mics there?
Yeah. Let me see if I can turn. No, it should only be one mic.
Okay.
Oh, here we go. Actually, I fixed it. I
got
saw
it.
what
I can hear you better now. Yeah.
Okay, awesome. Yeah. Okay. So, yeah, it's been about a year, and had a lot of transactions. Learned a lot from those transactions. I've actually sold a place just recently in Yorba Linda, and we were able to really price it competitively. We were able to actually get it at 95,000 under what asking was in a property in Yorba Linda. Yeah.
Okay, cool.
So right now it's getting really good for buyers right now. That's
Right.
one thing I'm noticing is now you're starting to see prices come down, which is a good thing for buyers.
Right.
But it's not tough on the sellers yet in Orange County. I think it's more of a correction than it is a crash, because if you're pricing the home correctly, you can get the homes are still selling.
Right. Okay. So let me do this. I know Kevin was here about 7-8 months ago. He was a brand new agent. I had invited him and talked to him about what he would expect in real estate from 2 points of views. One, how is he going to be in real estate? And he just gave what it was like. But how was it as a consumer? If you were a consumer back then, now you're in real estate, you've seen what's happening, you've done some transaction. So what I want you to answer for the viewers who are watching, and thanks for you watching. I really appreciate it. If you're brand new on the channel, I'm Mike and that's Kevin. And please follow and subscribe so that we do this every week so you can keep up with us. So Kevin, going back to you, tell us what you felt as a consumer a year ago and now how you feel. And I'm not talking about just Orange County. I'm talking in general. If you were a buyer or a seller, how do you see it differently than a year ago now?
Well, a year ago, like as a buyer, you felt like, oh, I'm just going to keep getting priced out of the market because the prices were so much higher. Like you felt like, hey, you're going to have to look at the list price and probably, bid a little bit more. I was working on one home, for one of my clients, and they sold it for a specific price, and the first bid was 100,000 over asking,
Right.
asking, so it's like really tough. It was really tough as a consumer,
Mm-hmm.
to purchase a property. You felt like, you felt a little priced out, and especially the young people that I
Right.
spoke to.
Right.
The young people feel like, oh no, there's, no way for me to get a home and things like that.
Mm-hmm.
But now I think it's, as of today, we're starting to see home prices drop. I
Okay.
mean, yeah, like for one of the homes that I sold was with Open Door.
Right.
The home was bought by Open Door and things like that. And I started looking for more homes that were Open Door. And if you look at them, they're all coming down on price.
Right. Yeah.
So it's yeah, I mean, yeah. So back then, yeah, it was like, hey, go out there and you have to, hey, got to spend some money to get that property. Really got to
Right.
spend. Now I
Right.
think it's getting to the point where we can negotiate now. And so that requires now my negotiation skills have to go up higher.
Right. Now, when you say negotiate, you're talking about the price and repairs and things like that. What do you mean when you can negotiate? Like,
Oh yeah, I have to definitely negotiating the price.
mm-hmm.
But it's not just price that people are concerned about, like a seller is concerned about. It's also peace of mind, which is, how long are the contingencies?
Right.
How long, or basically your right to cancel.
Right.
Like how long are you going to take for inspections? Normally it's like 17 days. Now, like people are looking for like shorter contingencies that can
Mm-hmm.
help.
Right.
Also, the request for repairs. Once you get an offer and accept it,
Mm-hmm.
now some of the power goes back to the buyer.
Right.
And at that point, you can say, hey, look, we did our inspections. We saw this wrong, that wrong. This maybe needs to get fixed. And you can send that in and have a request for repairs, which could be sometimes they repair it, but for the most part, they'll give you a credit at the end on the transaction to save you a
Right.
little money there.
Yeah. In fact, NAR took out a survey and they found out that in 2024, of all the homes that sold and closed, over 40% of all the sellers gave some kind of concession. Not the price drop. I'm talking about a concession, which means either they gave help with the down payment, FHA loans, or they gave some closing cost, or they helped with some down payment, or they fixed or gave credit for repairs,
Mm-hmm.
or they paid for the appraisal or something. 40% of all the homes sold. 2 years ago, like you said, there were multiple offers, and the seller said, hey, you pay me 100,000 more or take a hike.
Yeah, exactly.
That rhetoric is gone nationwide. So many people have given concessions, so many sellers on closed. So that's a good stat, and you pointed out the right thing because that's what's happening. What I want to bring it
I
out.
also want to bring up that they
Yep.
also, like my last two transactions, the seller took care of either all or a portion of my commission.
Oh, you mean on the seller side?
Yeah,
Sellers.
yeah. So I've been working with the buyer, working with buyers.
Right.
So my buyers didn't have to pay all of my commission because the sellers are taking care of that.
Right. And for those of you watching, if you don't know, now starting August 2024, the new regulation is the buyer's agent is supposed to be paid by the buyers, and you have to sign a contract with that. But when you're in escrow or before you open escrow, you could have your agent ask the seller's agent to have the seller pay for you. And that's what happened in your case. And that is happening pretty normal right now. Although there are some cases where the sellers go, you know what, I'm not going to pay commission. Then the buyers have to pay the buyer's agent so they can work it out. And, I think from what I've read and what I've heard, 97 to 98% of all the transactions, sellers are paying the buyer's agent. So the buyers don't have to pay. Right. Especially first-time home buyers. Because, the first-time home buyers are struggling to bring the down payment as it is. Then you got to pay, if you buy a $400,000 house and you have to pay the buyer's agent 3% commission, that's $12,000 on top of the down payment that he has to bring in, whether it's 10% or 5%. So it's a good thing that the sellers are still paying in general, But let's go back and talk about, like I said, our home values are crashing in half of the USA. If that's the case, why are buyers still struggling? Why are buyers still struggling to afford homes? So let's look at some of these points. The buyers still feel that homes are overpriced even with price cuts. That's how they feel, because you know what? They saw the home in the neighborhood or 10 miles down the road 3 years ago selling for 400, and now it's selling for 430. So in their mind, it's overpriced, right?
Mm-hmm.
And they saw that at 6%, now it's 6.8%. And then the sellers are saying, look, I need to sell, but I'm not going to drop the price. So here's another statistic. 40% of all the home sellers gave some kind of concession, but 40%, and this is 2025, not 2024, 2025, 40% of all these sellers delisted their homes. That means they took it off the home, because one main reason is, there's several reasons. One reason is they're not dropping their price. They feel like, hey, my neighbor sold for 400 2 years ago, I should get 430 or 450, and they're not dropping the price. That's one reason. Other reason could be, hey, I want to sell my house, but I don't want to buy something else for 600 and pay them 6% when I have 3%. So they still have that golden handcuffs.
Right.
That's another reason. And then buyers are having a hard time paying the 430. They may pay 400 or 420, but they're not jumping. So if they do not come up with the, like you said, negotiating, if they don't meet halfway or wherever they have to meet, they're canceling. So what's happening is, if they cancel, if in my city or in my neighborhood there's 10 homes for sale, and now 3 of them cancel, I only have 7 of them left, and I don't like any 7 of them. So now I'm not going to buy. Right. And as a buyer, I'm not going to pay them. So we have this kind of war going on between the buyers and the sellers. So that's one of the reasons. But let's look at this chart over here. Let's talk about affordability. I'm going to touch on that because a very important topic before we talk about why there are so many homes. Let me see here. Let me bring on screen here. Let me see. How do I share? Let's see. Go here. Go share. Okay. As you can see here, I'm not sure if you can see it. You can see the screen, right?
Very small for me, but.
Right. Yeah, it is small, but yeah. So I'll read it out so everybody can see it. So this this article is from National Association of Home Builders, NAHB, and it says here that nearly 60% of all U.S. households unable to afford a $300,000 home, which tells you, okay, the median home price right now in USA is about $450,000, but 60% can't even afford a $60,000 home. And I'll tell you why. The national household income is about $85,000, right? And to buy a medium home price today for $400,000 to $430,000, you need to make about $127,000. So that's why this fact comes in, where nearly 60% who don't make that kind of money can afford a house that's even $300,000 home. And I don't know where can you find a $300,000 home, Kevin?
Yeah.
Not in Southern California, right? Not even a mobile home.
No, that's pretty.
Maybe, I don't know where to go for seat. I have no idea.
I think it has to be a complete rebuild, fixer-upper.
Fixer-upper. Well, even a fixer-upper, you're not going to file him.
Yeah.
But just tells you the fact of what's happening. Let me read up a little bit so we get an idea here. NAHB has updated its housing affordability graph for 2025, and the latest data show that 76.4 million households, 57% out of the total of 134.3 million, are unable to afford a $300,000 home, let alone a $400,000. The graph is based on conventional underwriting standards that assume the cost of a mortgage, property tax, and property insurance should not exceed 28% of household income. Based on this methodology, NAHB economists have calculated how many households have enough income to afford a house at various price thresholds. So the good news is this is based on 28% debt to income ratio. As you know, a lot of the lenders don't want your PI, principal interest, to be about PITI to be about 30% or less. But we know, like FHA and a lot of the lenders will go up to 35, 40%. So I would say, if I had to guess, out of the 60% cannot afford it, I would say that number is a lot less, because there's a lot of lenders will give you a debt to income ratio of 40%. I know FHA gives you up to 45%, right? I mean, do you know what the number is for FHA, Kevin? Or
No, not off the top of my head. No.
yeah, it's about 45%. So the good news is, instead of this reading nearly 60%, I would say maybe 40 to 50% cannot afford that home, or they can afford a higher home because they stretch the debt to income ratio. I just want to bring it up. So because of that, there's not a lot of buyers. So if I'm a seller thinking about, hey, how come my house is not selling? How come they're not paying me the price? Well, 60% are knocked out, or 50% are already gone. They can't afford anything over 400, and the medium home price is 400. In California, the medium home price, Orange County is 1.2 right now.
Yeah,
Right.
1.16.
So you got to make close to $200,000 or $160,000 or something to be able to afford it, depending on how much down payment you have. So we have a dilemma here, So on that note, for if you're watching live, or even if you're watching a recording, let us know in your comments what's happening in your neighborhood. Is it a strong buyer's market, or is it a strong seller's market? Because in Orange County, I think, would you say, Kevin, it's like a neutral market, kind of 50-50?
Yeah, I think it's a little neutral. It's not as impactful as the other Sunbelt areas, but it's that's why I said it's more of a correction for us
Right.
than it
Right.
is a crash. Mm-hmm.
Right. Yeah, I think so. So, but in some areas, like I talked on my last live last week, definitely a lot of areas in Texas, a lot of areas in Florida, a lot of areas in Arizona. Not all of it, but a lot of big pockets is a buyer's market where there's a lot of homes on the market, and the buyers can make an offer on one, if they don't get the terms and conditions, they'll go to the next one. Then they'll go to the next one. So in those states, some of the states, it is a buyer's market. Southern California, we haven't seen that yet. Maybe we'll see it soon, maybe not, but we are seeing that.
Yeah.
The other factor, especially if you're a seller, that you have to consider is that with the rise in home prices, with the rise in interest rate, with the rise in egg prices, bread prices, utilities, gas, electricity, you name it, everything has gone up. And I'm sure you can feel it because I felt it. I stopped going to Starbucks. I stopped buying lunches. I bring a sandwich. Lunch is what, $15 today? I went
it's
to lunch.
$20 over just to go to Chipotle.
Yeah. I went with my wife for lunch last week in a decent restaurant right in Anaheim Hills. Lunch with tips was $55. I mean, that's like, it was a decent restaurant, nothing fancy, not a 5-star, but a decent lunch was $55.
Yeah.
So we have to cut back.
I have a family of 4, and what used to cost us $50 at one of our favorite restaurants, it only cost us $50 for a dinner for 4, has now become $100. But post COVID actually taught me how to cook at home. So I think it was preparation, or I would have to start cooking at home.
Right. And I bet you that dinner you cut back on the dessert. That doesn't even count the dessert, right?
No.
Right.
So soda is not groceries, as my father would say.
No. Yeah. So what I was getting at is the reason I mentioned those price hikes, not that you don't know, but the reason I mentioned it is because wages aren't keeping up with housing cost. Right? I mean, if you're working, how much raise have you gotten? 3%, 4%? Gas prices have doubled in Orange County, California. They've gone up so high. So if your wages don't keep up, and if everything else is going up, you can only buy a lower priced home, right? I mean, that's an issue. So that adds to the affordability, which is on the worst. In fact, affordability, according to National Association of Realtors, according to Lawrence Yun, chief economist, he came up with an article and he said that in the last 40 years, the affordability has been the lowest in the last 40 years. I mean, that's a big stat. Here's another fact. Buyers with pre-approvals and down payments still cannot find homes in their price range. When you show homes, Kevin, are you showing them, like, let's say a buyer comes in and say, I want to buy a $800,000 home, which is a cheaper home in Orange County. Right. Are you showing them $800,000 home? Are you showing them $850 or $750? How are you showing them homes?
Well, I'll give you an example. The current buyer I'm working with right now, she's been having a big struggle in finding a home, and she's approved for like $1 million. And so we are actually starting to look at some of the fixers that are around 800K, for Orange County. Looking at more of the fixers, seeing that if she can do that, and then because she does have some money saved up, that I get a fixer and then just kind of grow, fix up the home and then increase its value.
Right. So going back to certain areas, right? It says here, and this is a report that I made. I did some research. I wrote out some things that I want to talk about because we have a limited time. The other thing when it comes to affordability crisis is bidding wars continue in some areas, not all areas. Definitely not in Arizona, definitely not in Phoenix or Texas, definitely not in Florida, but in certain areas of New Jersey, New York, a lot of the northeastern states, they're having a fun ride there. They're getting, but all the Sun Belt, Louisiana, Alabama, Texas, coming down to Arizona, all those states, prices are down. So the Sun Belt is having a hard time. The northern states east, they have a brisk sales going on. Let me bring out another chart that I want to share with you. Let's talk about the home values are rising in certain areas. So let me bring up that screen quickly here. Take this out. Just give me a minute. Stop screen. Share screen. Bear with me. And this is from Zillow, by the way. So as you can see, this is from Zillow. It came out on August 18, 2025, so just a month old. It says here that, and you can see the screen, right? Let me double check. Let me see. I have only one screen here. Yeah, it says here the home values are rising in half of the country, falling in other. So let me read it further. Buyers gain negotiating leverage, but high costs keep many on the sidelines. Buyers continue to gain leverage. Now, 27 metros are in a buyer's favor or neutral, up from 27 last month. Listings are lingering. That means they're taking longer to sell. The median for sale home has been listed for 60 days, the longest of any July in Zillow data. This talks about July. Sellers cut prices on 27% of listings, a record high in Zillow data that stretches through 2018. We talked earlier about how sellers have to price cut, or if they don't price cut, they're just taking it off the market and they're saying, you know what, I'm done. I'm not even going to sell. Let's look at further. Seattle, August. It says here that home values fell in half of the nation's largest markets over the past year, according to the latest market report from Zillow. Buyers are gaining leverage across the country, with more markets tipping towards balance, and sellers cutting prices at record rates to compete. But while buyers are making gains in the battle of negotiating power, they're losing the war on affordability. So that's what we were talking earlier. Let me go back to the screen here. We were talking earlier that on one hand, sellers are holding on to the price.
Right.
Home prices are dropping in a lot of areas. At the same time, buyers are having a hard time affording. They can't afford it, or the prices are too high because the prices are still high. Interest rates are still high. And in certain states, property taxes, like in Texas, has skyrocketed. So when they go to qualify, the lenders are going to look at your principal, your interest. They also look at your taxes. They also look at your insurances, put that in as a debt. And a lot of people who are buying newer homes or condominiums or townhomes, they have HOA, and they have gone up sky high because of insurance. So now, even if the prices drop, your PITI still keeps going up. So we have a, quote, war going on between the buyers and the sellers. And that's why we have home price drops, and home price increases. I'm going to read further to see what they're saying here. By the way, all the blue dots, let me see. What is the blue dots and what are the red dots? I wish I had seen that earlier. Let me see. That's all the drops over here. Let me see. Let me go back. Okay. So let me go back and read this further. Home values rose over last year in 25 major markets, mostly in the Midwest and Northeast. Demand is high, especially in affordable areas. but building restrictions have put a damper on new and higher density projects. Sellers have few options to move up to, and existing inventory is still below pre-pandemic average in many metro areas. What they're saying is that inventory has gone up significantly, right? I mean, even in Orange County, it's gone up quite a bit, right?
Mm-hmm.
It's still lower than pre-pandemic levels. Have you noticed inventory going up or down in Orange County or in nation? What's your thought on the inventory overall?
Yeah, inventory, it's weird because, yeah, it is going up, but it's still a little bit of a struggle, especially working with buyers. They're still having a hard time
Mm-hmm.
finding that property because it's, one, the prices, while they are sellers are slightly coming down, it's still, the inventory is not as strong as it was before, but it is increasing. That's why the sellers are coming down a little bit.
Right. Yeah, it is increasing everywhere. I mean, we've seen an increase. In fact, we know for a fact that in Orange County, it used to take a year and a half ago, used to take on, about 20 to 25 days to sell a house. Now it's taking what, 60 days, 45 days at least to sell a house?
Yeah.
Yeah.
I think I looked at the number. I think it was 35 days last year, and now it's going up to 53.
This is all of Orange County or
Orange
Anaheim?
County. Yeah, all of Orange County. Yeah.
So it's taking an average of 55 days to sell a house
Yeah.
compared to 35.
But I believe that was per Zillow.
Yeah. Well, Zillow gets data from our multiple listing service, right?
Yeah.
I mean, that's how they get the data. So, yeah. And I thought it was 45 to 50. So we're right on track.
Yeah.
Right. And then the sellers are getting frustrated because they're saying, hey, Mike or Kevin, how come you haven't sold my house? Well, Mr. Seller, we don't tell them your price is too high.
Yeah.
I mean, why do you feel? I mean, you're not.
I mean, they're just like right now, sellers are a little bit stubborn because, they don't want to give up the money, but the thing is like buyers just got frustrated and they're like, okay, well, we're just not going to buy right now, or we're going to put an offer and it's going to be a little bit lower.
Right.
And because that's what I recommend to all my buyers. I just say, well, if you like the home, let's put an offer in. Doesn't mean you have to put it at list. Let's actually show the sellers that this is how much we're willing to pay.
Right.
And what I found is it's taking longer. That's why it's going up 50, 60 days is it's taking the sellers a while to see that, hey, that offer that they presented, I don't know if I'm going to get higher than that. And so sometimes you just have to wait it out. I mean, the home I did that I just closed, it was on the market since February. And, we put in an offer that was lower than what they asked, and we got it because it's just been sitting there so long.
Right. What were they asking?
They were asking for 1,225. We actually put in an offer for like $1 million, and then they met us in the middle, 1.13.
Okay, and he closed it.
So we got about 95,000, under asking.
Right. And did they give any closing costs or repairs or anything? Any concessions?
Yeah, we actually did a request for repairs for about 15,000.
Okay.
They paid my commission 2.5%. So,
nice.
So it's they're real. Some sellers are starting to see it.
Right.
And so as long as you, if you see a property out there, like that's what I tell the buyers, if you see something that you want, put the offer in.
Right.
Because that's how they're going to get some sellers, they're going to look at the data and they'll ignore it, but seeing an offer right in front of you.
Right. Yeah.
It's like, okay, this is reality.
So let's talk about that seller. And I want to, we don't know who the seller is. So in that case, obviously he was motivated, or she or them, they were motivated because they understood the market. They lowered the price. They listened to their agent. They looked at your offer. They thought your buyers was serious. What was their motivation to sell? Did they have to move out, or are they elderly? Why was their motivation to sell?
Well, this was actually a company that we bought it from. And I think what it came down to is they looked at the numbers. They have to get this property off their books. So it was more of an investor that we were buying it from. And
right.
And at some point you got to get this off your books. But I did another property, and it was because they were they moved out of state, they moved out of the country actually,
Okay.
and they were eager to sell. They were eager to sell, but
Right.
yeah, some of the other sellers I've been working with, they, there's a reason why somebody's selling their property,
Right.
and once you find out what that reason is,
Right.
sometimes there's speed to it.
Right.
Some, if they can sit on it, they can sit on it and wait for
Right.
things to happen. But
Yeah.
it just seems like all of the marketers are saying, hey, it's going to start turning to a buyer's market,
Right. Right.
or at least even out.
Right. Right. Yeah. Well, we have to look at two things. Well, we have to look at one thing, motivation on the buyer side, because the buyer has to be really motivated to pay the higher price, to pay the higher interest rate, knowing
Mhm.
that the property tax, insurance, utilities, everything's going to go up. So the buyer has to be really motivated. If I'm paying 4,000, 5,000 a month rent, which is normal here in Orange County,
Mhm.
it might be better for me to just buy something and pay 6,000 in mortgage. So by the time I get the deductions and all that, I'm even. So I have to be
Yeah.
really motivated to pay that. On the
Mhm.
other hand, if I'm a seller, I have to be really motivated seller to sell, because I understand that, hey, if I don't sell now, and if I wait till 2 or 3 more years, and a lot of people are talking about prices going down, and right now, according to Zillow, half of the metro areas prices are up and half are down. What if your city becomes one of those that are down? Then like the seller got lucky and got 1.1, but what if he was stubborn and say, oh, I'm not going to sell, and brings it on the market?
Yeah.
He might have gotten 1 million.
Yeah. Oh,
We don't
yeah.
know what's going to happen next year. What if it goes down?
Yeah. But I think that's where, when you're as a buyer or as a seller, you really need to look at the localized market,
Mhm.
like looking at the whole country or like the whole Sun Belt. There's different neighborhoods react differently. Some neighborhoods are just high value neighborhoods. People just want to be in that neighborhood, and they're going to see that that property is going to go up in value versus other neighborhoods.
Mhm. Right.
So you do really want to look at localized information. The more localized you can get, the better.
Right. Right. Yeah.
Yeah.
Yep. Yep. So let's talk about a little bit about the hidden cost of owning. And we've already talked about it, but I want to bring it up. When you buy a house, in fact, a lot of the buyers, the reason I want to bring this up is a lot of the buyers who bought since 21, 22, 23, 24, 25 had fixed mortgages are getting the shock of their life. There's 2 million homes in default right now and increasing,
Mhm.
not because they lost a job, not because you know the income dropped, but what happened was their payments went up. Even though it was a fixed payment, PITI, fixed,
Mhm.
legally it's not fixed because only your principal and interest is fixed on a fixed mortgage, but your tax and insurance always changes, and HOA,
Mhm.
if you have HOA. So what happened is, because of the insurance crisis, and when I mean crisis, in Southern California we have the wildfires and all that. My insurance has
Yeah.
doubled in the last 2 or 3 years, over the last 2 or 3 years. So if I was paying 3,000 a month, all of a sudden now I'm paying 3,200 a month, 3,300 a month, because my
Mhm.
insurance went up. A lot of the states in Texas, Florida, Arizona, their taxes jumped, doubled and tripled. So my
Mhm.
3,200 payment went to 4,000 and 4,500. Then my HOA went up. So what's happening is property taxes climbing forces seniors and middle class families to sell. So in Florida, Arizona, Texas, I bring these up because that's where it's happening. A lot of the seniors who bought homes or been there for 20, 30 years and refinance and have mortgage payments cannot afford it because they have fixed income, and based on the fixed income they refinance. But now all of a sudden the taxes went up, insurance went up, the
Mhm.
maintenance went up, the groceries went up, the
Right.
medical costs went up, the prescriptions went up, and all of a sudden they're choking.
Yeah.
So
Yeah.
all these guys, especially seniors, middle class families, are putting them on the market, and that's increasing the inventory. And that's why the inventory is increasing, not because people want to sell and buy, but it's a distressed sell. I
Yeah.
was calling expired today. I know you call expires. Expires are the sellers who delist their properties.
Mhm.
And I came across two properties when I clicked on the tax records. When you're calling, you click on tax records.
Yeah.
Two are on the pre-foreclosure. This is in Orange
Yeah.
County.
Right.
I
Mhm.
haven't seen that in 5 years.
Yeah.
And I saw it today, two pre-foreclosures going on. And these
Yeah.
were properties for sale that got delisted today.
Yeah, I saw some reports that it's like people have more debt, have been accumulating more debt than they have in years, right?
Mhm.
So it's just getting to a point now where like the salaries aren't going up, home prices are going up, things are becoming way more expensive, and people are accumulating more debt. So it's one of those things we have to rethink lifestyle and how we are and stuff like that. And the people that are selling their properties, if you're getting to that point, I mean, it's still not to a point where, like, if you have to sell your home, you can
Mhm.
consider downsizing,
Right.
you
Yep.
know and that's one of the things I would say to, like, somebody that's in that situation. Well, maybe it's time to downsize, because all that time you've been paying into your home, the benefit of having a home is all the equity that you have
Exactly.
accumulated over that time.
Right. Yeah.
So
Yeah. Go ahead. Finish up. Then
well,
we'll
yeah,
make
yeah.
a
So,
comment.
that's
Yeah.
that's one of the things you got to think about, when
Right.
you start looking at your finances.
Absolutely. Be forewarned. Be cautious. Buy below your means. Blah blah blah. So let's
Yeah, yeah.
let's not go there. But Richard, hey, thanks for making the comments and thanks for watching. Richard is saying that the prices are discontinued from the economy. Many more cities to follow, and another year of record low home sales for the books. You're absolutely right. 2005, 2025, and 2024 are going history, will go in history in the last 30, 40 years as the lowest number of home sales. They're about 4 million, 4.1 last year. This year, NAR is predicting the same amount of sales, 4.1 million. To give you a reference point, in 2021 or 2022, the number of homes sold in 1 year was 6.3 or 6.4 million homes sold. Right now, it's 4 million homes sold. So 2.5 million homes less. That's 5 million transactions. No wonder realtors are, well, I won't go there. I won't go there and kill my fellow realtors. But no wonder realtors are struggling, because if you look at it compared to 6.2 million sales in 2023, I believe it could be 2022, 5 million transactions less, because you count two sides per transaction, buyer, seller, right? That means 5 million transactions. Imagine the commission lost by agents. That's a huge number. You're talking millions and millions and millions. But yeah, you're absolutely right. Many more cities to follow, and it's going to be a record low for the books. But the good news is, the prediction is, of course, predictions could be wrong. The prediction is in 2026, the number of home sales is going to be higher. So now let's just wait and see. So
Mhm.
appreciate your comment, and if you're watching, if you have any questions or comments, please make it so we know and we can discuss it, and what's happening in your area. Some other viewers can know what's happening. So thanks for that. So the other confusion, and we talked about the insurance. Let's talk about HOA. HOA companies are making a killing. Of course, their property insurance went up too, because they have to buy the master policy if it's a townhouse or condominium. At the same time, HOA is out of control, because those are, and I mean that in general, they're taking advantage of the homeowners from all the bad reports I've seen. They're taking a lot of control. In fact, I just got a notice to paint my balcony because it has some chips and all that. Been here 25 years. The first time I got a notice that I got to paint my balcony patio because of some chip paint, and which I'll do. I got to follow. But I think HOA is using too much control in general, from the reports, from videos that I'm reading, especially in the East Coast, and and they're making a lot of money because these are run by property management companies. And also, what I'm hearing a lot, and I'm a little bit off the subject here, but what I'm hearing also is a lot of the developers, a lot of the builders have a stake in these property management companies who run the HOA companies, and I'll leave it at that.
Yeah, well, I would like to make a point on that, is make up, because one of my transactions that I had this year, big issues with HOA insurance. So understanding your HOA master insurance, their fidelity bonds, the things that will help with errors and omissions and thefts and all that kind of thing, are super important. And the one thing that I've noticed is that as a homeowner, I started going to my HOA meetings.
Okay.
And what I find is nobody goes to the HOA meetings. And when you don't go to the HOA meetings, you don't find out what's going on. I mean, you spend this money and you're just letting a group of people decide what they're doing
Yeah.
with the money you spend every month. And they're going higher and higher. You complain about them going higher and higher, but you're not going to the meetings and making sure that, hey, does the master insurance cover everything?
Mm-hmm.
There's several homes that I looked at and the master insurance doesn't cover everything and you can't get the loan.
Okay.
But you got to make sure those things are there. So that's my recommendation. I started, from experience. I had to learn that from experience. I didn't really know much about it until I got into the real estate game. But boy, did I learn a lot.
Right. No, you absolutely. I've never gone to an HOA meeting, nor do I plan on going. Because it's too much work. Nobody listens anyways. And unless you go regularly, unless you say something, and unless you know exactly what's going on, because I don't want to tell them something just because from one meeting, I don't know all the facts. So if you go, you got to go regular. And, I totally understand, So going back, let's move on. Let's talk about the confusion or the uncertainty of the home sellers and the home buyers. What's happening is there's a big confusion. And the confusion is are we heading into a crash or are we heading into a correction? Mm-hmm. So Kevin, you're new in the business. 1 year, I'm in 30 years. So as far as the consumer's point of view, what is a crash and what is a correction?
Well, I think I think from a consumer side is, hey, what happened? 2008? Was it 2008 when that happened? I think a lot of people think that's going to happen again, right? Like there's going to be this point where all the home prices are going to drop and this is going to happen. And there's a lot of fear in that. A lot of the buyers I speak with are even the people I'm speaking to and asking if they would want to be a buyer, buy a home. And they're like, no, we're going to have this big crash again, and that's their mindset. However, I think this, just speaking for OC, I really do think it's more of a correction, right? I think we're getting the prices right, things are starting to correct and balance out. And I think it's healthy, right? Like having a strong seller's market and the buyer's got to pay all this money and it just keeps going higher and higher and higher. I think it just needs to slow a little bit. Right. And that's a good thing. Right. But as for a huge crash for that to happen, I think it's more of a correction.
More of a correction. Right.
Yeah.
Yeah. Mm-hmm. Yep. Let me add another screen here and we can talk about it. Let me see here. Rather than you and me say it, this report is from September 16th, just a few days ago. It's from Yahoo Finance. Let me see if you can see it. Yeah, you can see it, right? I'm going to take this out. And I'm going to read a little bit. So when will the housing market crash again? This is a few days old article. A housing market crash happens when home values plummet due to a lack of demand for an oversupply of homes. The factors leading to a housing market crash are varied, ranging from economic recession to high mortgage rates that make buying a home widely unaffordable. A housing crash can have upsides for some home buyers, with lower prices making homes more affordable. For other buyers, however, a crash means losing built-up home equity and tighter finances that could lead to falling behind on mortgage payments. So what's ahead for the housing market in 2025? Well, let's see. So before I read the next paragraph, a crash happens. Let's compare to what happened in 2008. The reason 2000 home prices crash is because if you look at the inventory, because we talked about inventory earlier, right? We have right now 3 or 4 months supply, or there's a lot of inventory, but it's still below the norms. Pre-pandemic levels, we're still low. So right now we have, let's say, a 4 month supply, which is kind of normal. 4 to 5 month supply is kind of normal. But if you look at 2008, and I was there, I saw the crash, I went through it, I saw the buyers, sellers lose homes, lose their wives, lose their cars. A lot of things happen. I've had agents come to the office early in the morning and eat bread and butter. I've seen that because they could not sell. So I've seen it all. I also saw that during that time, the inventory was a 12-month supply. If you drive on a street, you see 20 homes, for sale signs.
Mm-hmm.
If you drive 2 or 3 streets in a neighborhood, everything was for sale, right? Right now, you don't see that. So to have a crash, you must have a lot of inventory. At the same time, you must have where buyers are not buying. But what's happening right now is there's 3 or 4 or 5 months supply. But guess what? Homes are going in escrow.
Mm-hmm.
I opened up an escrow on Friday with a gal who bought a house, 2-bedroom condo in Anaheim. It was listed for $725, 2 bedrooms, 2 bath. It was our third offer. We got it accepted. The first 2, she did not get it because there were multiple offers.
Mm-hmm.
Condos were selling 30, 40,000 over list price, and she did not get it. She was upset. Finally, we found one. That property was on the market originally for $750 4 months ago. They dropped the price to $730, and then the seller delisted, and then another agent relisted at $725, right? And I won't say the exact price because I'm not supposed to. It's $5,000 to $10,000 less than $730. So a $750 home 6 months ago, our buyers got it for $30,000, $40,000 cheaper.
Mm-hmm.
And we just did an inspection. It does not have a lot of work. We're going to ask for some repairs.
Yeah. Yeah.
So the market is still healthy compared to 2008, 12 months of supply. We have 4 or 5 months supply, and homes are selling. There's multiple offers. So there is no crash, but there is a correction. Correction, like you explained, is you have to be realistic, right? You can't just ask what you want.
Yeah. And not to add on to what you're saying, I mean, I did 2 last week. I closed 2 homes last week. And I also went through the 2008 crash. And as a homeowner, and and going through that, we felt the panic, like, oh no, our home is not worth what we spent on it, and we're freaking out and all this kind of stuff. But 10 years later, or even earlier than that, now we have over $300,000 worth of equity in our home.
Okay.
So it's like, even if a crash happens, which I don't think that's what we're at, but even when it does happen and you can weather that storm, while I'm weathering the storm, I'm eating dinner with my family, I'm watching TV, I'm hanging out with my friends, playing board games, so and just living my life and weathered that storm, and then once that was over, now I have all this equity in my home.
Right. Well, let's see what Yahoo Finance says about when will the housing market crash. As you can see on your screen, I'll read out a couple of paragraphs here because it's small, so maybe you cannot see it. So I'll read it out. In general, economists don't foresee a housing market crash anytime in 2025, but 2025 is almost over. According to recent insights from JP Morgan, it's predicted that supply won't outpace the demand for homes. Housing experts point out that home supply is gradually increasing, but the operative word is gradually. Supply would have to move much faster to contribute to a crash. Mm-hmm. Jobs data points towards no crash in sight. Well, let's see what that is about. Unless there is a significant surge in the rate of unemployment, which is currently not in the forecast, the housing market is expected to continue to rebound from 2023 lows, said Selma Hepp, chief economist of real estate data analyst firm Cotality, in an email. Current data backs that up, with the August 2025 job data from the U.S. Bureau of Labor and Statistics showing unemployment at 4.3%. Very little change since August 2025. So, I mean, the data is showing that, hey, unemployment is good. Inflation is in check. Rates are kind of reasonable. So I don't know. What's your take on that from a consumer point of view, Kevin?
From a consumer's point of view, like I said, I think it's just, we're at a point where we're going to have to negotiate for what we want. Mm-hmm. We're just at that point in time. So it's not like, all the way on one side anymore.
Right. Yeah.
And now we got to negotiate. Sellers are going to have to negotiate and rethink, we're not going to hit these high numbers, but we got to make we got to market our homes differently. We got to find what's going to make our homes that's going to draw buyers in. What are we going to do? You know, are we going to stage it better? Are we going to offer some concessions here or things like that? And buyers are going to have some negotiation power too. So now I just think it's correcting to being more fair. You know, like, you know, we're both working together and getting something mutually beneficial for both parties.
Right. Yep. Yeah, but you still have to price it right. As a seller, you have to price it right. Like Kevin said, market it, trim it, curb appeal, you know, fix up little small ding dangs and present it well, market it well, right?
Mm-hmm.
And then we'll find a buyer, or the buyer's agent will find a buyer that's willing to pay you that price, pending your condition of your property and location, obviously. So they look at your condition, property, and your terms with the price. And then they say, okay, I've seen 5 other homes. You have this and this and this. The other 4 have this, and they'll make an offer on yours. Mm-hmm. So you have to be priced right. You have to have it in selling condition, have a great curb appeal. So when somebody parks the car, looks at your roof, look at your windows, or, you know, it's got to be presentable, you know?
Yeah. It's funny. I was talking to a roof inspector, and he was saying that most people will, you know, check their bank statements, their finances, they get their car checked, they do all this stuff, but their roof, nobody looks at the roof. Nobody checks their roof and makes sure that their roof is still in good working order and still, you know, so it's one of those things.
Here's the thing though. It's a different market. Mm-hmm. You know, and I know, and all the buyers know, drone shots are very popular. What's the first thing a drone shot take a picture of? The roof. So if I'm a buyer, it's midnight, right? And I'm a buyer looking for a house or thinking about buying. I'm going to go online first, right? If I'm starting a search, 90% of all the buyers, according to NAR, National Association of Realtors, 90% start their search online. So they look at pictures and videos. So if they'll, you know, on mobile phone, lying on the bed and looking, mobile phone, lying and looking at pictures, if they see that damaged roof or bushy yard because you have a drone shots or even regular shots, they're going to pass through until they find a great shot. Oh yeah, let me call my agent. I want to see that house. The others is a great house, very nice house, price right, great location, but a bad roof or a bad landscaping, which shows up in the picture, they're going to pass.
Right.
So, you know, you have to price it right. Don't expect you're going to have multiple offers. Those days are gone, you know, so. I'm going to read further more about home prices, one more paragraph so we know what they're talking about. Our home price is slumping a little bit. In a recent report, Cotality reported that July's year-over-year home prices cooled off by 1.4% from July of 2024. However, plenty of states, especially on the East Coast, still experience price increases. Zillow July 2025 home value and home sales forecast predicts national home prices will decrease overall in 2025, ending the year 0.9% lower than they began. By the way, just to recap, because I like Zillow, but I don't like Zillow. Zillow in 2024 fourth quarter predicted that home prices will go down in the first 1 and 2 quarters of 2025, which it didn't. It went up. So it changed its predictions. So don't rely totally on Zillow. Look at other reports as well. In general, they're pretty correct, but I wouldn't go 100% on it. So I'm just giving you a word of caution. And I'm getting that based on talking to other bloggers, other real estate experts, other people that I talk to or read their reports. You know, for example, if you type in your home, if you're a home seller, type in your home in Zillow. What's the estimate? Then go to realtor.com, type it in, get the value. Then go to Redfin, type it in. Go to Trulia, type it in. 4 values, they'll all be different. And I bet you, if I'm in Orange County, I'll have a $200,000 difference from the lowest to the highest.
Right.
So don't rely on one report. Don't rely on what I'm saying or what Kevin's saying. We just give you a general idea. Zillow gives you a general idea. It's not 100% accurate. Just like Yahoo Finance may not be accurate. They're basing it on something. So always look at a few more reports. Always talk to a few realtors. And by the way, you can always direct message me. You can always comment. I'll respond to you. And if I cannot respond to you in your local market, I belong to the top 3% of all the realtors nationwide. I belong in that group, a networking group, and I'll be glad to refer you those agents or lenders. So talk to a few lenders if you're thinking about selling or if you're thinking about buying. What's happening in your local market? Is it a good time to sell? Is it a good time to buy? Blah blah blah. Get few opinions. Don't go by one opinion. That's what I'm gonna say out, and that's why
Well,
I do this, to give you information that'll
hmm.
help you make better decisions.
Yeah, that's the one thing I always kind of laugh about, the Zillow and the Redfin and all these estimates. The one thing that a realtor does is when they're coming with the estimates, they're looking at some of the things that Zillow and all these other people are looking at, or other companies looking at, but they're not inside your house and seeing what's going on inside. If you're keeping your house up really well maintained, and the property is like turnkey, you just remodeled the kitchen or something like that, then that's going to be a different price than that same house if they didn't do any work and it's old carpets and things like that. So you you really still need a realtor to go in, look at the property, and give you a value of what the property would be.
Yeah, absolutely. And Zillow takes pictures from the front. They have a guy there on your car, camera mounted. They take a picture. They don't know that you did yard work or you landscaping or you put new trees and spend a lot of money on the rocks or fountains, which adds value to your home. They don't know that. So how can they tell you your house is worth 1.4's estimate without even knowing all that?
Yeah.
So I think it's a disservice to the real estate industry. It has done a disservice. In fact, I don't want to get into that, but Zillow just got sued. I don't want to get into that, but Zillow has a big lawsuit going on right now. Has to do with misleading the buyers. For example, there's several lawsuits going on, but one of them is like when you see a property, and when you see the listing agent is Kevin Wells, right? And when you click on it and fill out the form, say, I want a realtor to call me back. Guess what? Kevin doesn't call you back. They give it to somebody who's paying them to buy the leads. So Mike Patel will call him. So there's a lawsuit going on. I don't know all the details. So legally speaking, I'm not sure, but that's what's happening. That's one of the reasons. But there is a big lawsuit going on. And the other big news today is that the Compass is buying BHS at, buying another 2 or 3 several companies together. So the real estate market will be changing. We'll give you an update on what's happening with the lawsuit in the next few live streams and give you an update on that. I want to go back to that article and see what Yahoo Finance says about the housing market crashes, and where they talk about the supply and demand dynamics. I'm going to read it out. Let me see if I can make it bigger so you can see it better. There we go. For the housing market to crash, supply and demand must be drastically out of balance, favoring supply. Looking back at the first half of 2025, we can see that while supply is increasing, the discrepancy isn't as drastic as it was in 2008. As of July 2025, the Federal Reserve Bank of St. Louis showed a housing supply of just over 9 months. I'll read one more paragraph. In a normal market balance between buyers and sellers, we would have 6 months supply of homes, said Rick Sharga, founder of and CEO of CJ Patrick Company, a market intelligence firm for real estate and mortgage companies. For comparison, the buildup to the 2008 financial crisis led to a drastic oversupply of 13 months. That was more than double the average figure of 6 months and more than a way to go from a current 9.2 month supply. So there you go. It's all about supply and demand. Mm-hmm. I had mentioned 12 months, but it was 13 months. And right now, we're not even close. In Orange County, I don't think we're over 4 months. I don't think so. Arizona, Texas, Florida, maybe 6 months, but definitely not California. Right?
Right. Oh, yeah, definitely.
Yep. Okay. So I'm going to switch topics here. And what's happening is there's emotional frustrations from the buyers and the sellers. So let's touch on that. A lot of the buyers are feeling trapped. A lot of the sellers are feeling trapped. Buyers are feeling trapped. They can't afford to buy. and sellers cannot afford to sell or can't move without taking a loss. In fact, let me talk about a video I did. I have a video I did 2 months ago. I talk about sellers cannot afford to sell their home and they cannot afford to stay in the home. And I'll give you one example. There's a lady in Florida, because of the hurricane damage, her house got damaged. She lives in a townhouse complex. She's been there for 20 years. She's about 72 years old, or she was 72 years old. She's never been late on a payment once in the 20 years. Guess what? The last year, she had not made any payments. You know why? Several things. First of all, she's a senior with fixed income. She paid every month like clockwork. Now, her property taxes went up. Her insurance skyrocketed. Her HOA went from $300 to $1,000. Not only that, as you know, Kevin, a lot of the homeowners association or property management companies assessed upfront cost $20,000, $30,000, $100,000 to the owners of each units so they can do the damage and pay for the property damage due to the hurricane. And also because of the regulation, remember that collapse, that building collapsed. So there's a new regulation where you have to have it inspected and reassessed and fix it according to the new standards. So all these have been reassessed. So this lady that I'm talking about cannot afford her house anymore. The mortgage payments, the property taxes, the HOA, she just can't afford it. But guess what? She can't afford to sell it either, because if she sells it, where can she go? She hasn't paid in a year, so credit is ruined. She cannot rent anywhere. Nobody's going to give her a rent. And furthermore, she can't afford the rent anyways, because it's going to be just as much as her mortgage payment.
Yeah.
So she can't move anywhere. So she's stuck in there. And that's what's happening. A lot of people are trapped. They can't sell and they can't afford their home. And that's what's happening. Even I did another example in the Valley in LA. This lady, she's single. She said, I can't sell and I can't afford to stay here, because if I sell, I don't know where to go. And at the same time, she can't do the maintenance. She can't fix her house. She can't afford the payments. Insurance went up. She's near that fire hazard area where the fire was. So insurance just took off. So rough times are out there, but at the same time, the real estate is still going on. So when we talk about emotional, that's what's happening. Anger at greedy prices and the system. What system are they talking about? They're talking about the developers. They're talking about the banks. They're talking about government. They're talking about realtors. They're talking about Blackstone and companies like that. The private equity companies now are buying homes in droves. They go to a community and buy all the 100 homes, all the 1,000 homes, and they increase the rent. Atlanta is the hub spot for that. They're buying homes in droves because they're big corporations, right? They can buy at cheap prices. They can call the bank and say, you got 1,000 homes in foreclosure, we'll buy them. And they buy them and they rent them out. So the sellers, and at the same time, a lot of them are selling. So when the market goes down, they dump into the market, sell it because they can afford lower prices. They don't care. So a lot of things are happening. And then distrust towards media narratives and clickbait crash talk. I know of 4 YouTubers. I won't mention their names. They've been talking since 2021, 2022. Crash is coming. Housing bubble is coming. You've seen that. I get calls from my friends. Hey, look at this guy. He's talking about crash. They've been talking about it for 4 years straight. They have 1 million followers, 500,000 followers. And their followers, I feel sorry for them because they're buying bait. And you may ask, well, why are these guys doing that? I'll tell you why. Because when you watch those YouTube videos, they're making a lot of money on ads. Because when you're watching those crash, when an ad pops up and you watch 30 seconds or a minute, these guys are making 20,000, 30,000, 40,000 a month because you are watching their trash. They're giving you trash. And I've seen those. I won't mention the name, but you can, I'm sure
so while they're succeeding, they're just, stepping on you to succeed.
They do it on purpose. I mean, I can show you one guy for the last 5 years. I've been following him for 4 years. Talks nothing but crash. And one of the guys is a broker. And then he says realtors are suckers and liars, and he's the number one liar. I wish
Yeah,
I could pull it up. I
it's
can.
very sad because I do have a lot of people in my life that are friends or whatnot, and they go, "Oh yeah, the market's going to crash and this is going to happen," and it's really because look, buying a house is a scary thing. Period. I mean, it was a
Right.
in the top five most stressful thing you can do is
Hmm.
buy a home. And it's very because it's in between marriage and death. It's a big deal to do something like that. But when you get this kind of clickbait thing that gets out of there and you just listen to it because it's easy, it says it's easy, and you don't really dive in. One of my clients never thought they could afford a home. Back in February,
Uh-huh.
never thought they could afford a home because that clickbait's out there. They never even questioned. Went to a lender and said, "Hey, could I afford this? Could I actually make this happen?" And so I introduced him to a lender, and he found out, oh my goodness, I actually can afford a home.
Hmm.
And there are so many programs out there for
Yep.
buyers. I mean, I learned stuff about down payment assistance, and you need to learn about it because it's not as what I thought it was until I actually started learning about it.
Hmm.
There's grants out there. That's literally free money.
Yeah.
So you really do have to do your research and anything because unfortunately there are people out there that are going to profit off of you just doing the click and the excitement and the scary and that's what they do. They just throw it out there, sensationalism.
People
And
love negativity. People love fear, and
mhm,
they know that. Because if you
yeah,
watch news, what's news? It's
yeah,
fear, it's anxiety.
yeah,
Market's going to crash. This is going to happen. Earthquake. This is going to happen. These YouTubers know your weakness or
hmm,
our weakness. They on it, and they're making millions. And for their respect, I have one guy pulled out, but I'm not going to put him on there just for their respect because I don't want to do that. But there's so many out there. All they
yeah,
talk about is crash and doom. It's not there. Market is brisk. Homes are being
mhm,
sold. Yes, there has been more inventory. Yes, there has been price drops. The market is still, I would consider, pretty active
yeah, yeah, and
overall. And I'm talking
that's why
overall.
you need these kind of programs is so you can get those facts.
Right.
Unfortunately, you have to be kind of sensationalist to draw people in, but the
Hmm.
facts are the market is just correcting itself.
Right. Right.
And you saw right there, we're not even close to being at a housing crash.
No. No.
So it's
Prices are
do
dropping
your research.
slowly. So here's the thing. I'll give you an idea. Let's take a house. Somebody who bought a house for $250,000 in Anaheim Hills 30 years ago, that house is worth $1 million. That's a
Right.
fact. They have
Mhm.
quadrupled. If I look at the average homes, those who bought in 94, 95, 96, 97, market was low, their house has quadrupled,
Oh yeah,
right?
yeah.
So let's say the house is worth $1 million.
Hmm.
Now that guy owner wants to sell it. And the realtor tells him, you know what, Mr. Seller, Mr. Mrs. Seller, your house is not worth $1 million, but it's worth 975, 950. Yeah,
Hmm.
it's lower than a million, but it's way higher than 250,
Exactly,
right?
exactly.
So think about that. Think about
Yeah.
that. You're walking away with $750,000. You've enjoyed the house. You probably enjoyed the kids or you're with your parents. You've had parties in there. You've had Halloween in there. You've had birthday parties in there. And you worried about $20,000 or $30,000 because those guys are saying market's crashing, sell now, blah, blah, blah. So don't
Yeah.
fall for that. All the more reason to call me or contact me so I can refer you to an agent who knows what they're talking about, who's been in business for a while, who gets all his or her business by referrals. So when you talk to them, they're going to give you facts. So whether you're selling or buying or just want information, hit me up. I'll refer you to the agents. There's absolutely no obligation, and you'll do yourself a service of knowing the facts in your local market. So if there's nothing else you could do that. And if you don't ask for a referral, just call a few agents in your local neighborhood. I'm sure you know them through open houses or through flyers or through a website. Talk to them and say, hey, what's happening in our market? Then decide what you want to do. But make the right decision based on the right numbers, based on the time and your local market.
Yeah, I love that. I love that.
Yeah.
There's a stat that I always like to look at is since 1960. You look at the housing market since 1960. Home prices have only dropped 7 times in 7 times in that time frame. So over time, it's still where generational wealth comes from, and you're going to get that equity if you hold into that house, and you're going to be gaining that equity, like you're saying, just hanging with your family.
Yep.
Having your Halloween parties or Christmas parties or Thanksgiving dinner.
Right.
You're gaining equity in your home.
Exactly.
Making memories.
Every month you make that payment, you're gaining equity. Yes, the prices may go down. I remember when I bought my house, I bought it under 300. Then it went up to 400. And then the market crash came. It went back down to 250. And I called my brother. I remember that I'm going to sell my house. I can't afford it. He said, just hang in there. Just hang in there. Mm-hmm. Today, the price is way up here. I hung in there.
Yeah.
Based on facts. Of course we couldn't make any sales. We had kids in college, we had 4 car payments, so it was a tough time even for me, but we survived, and here we are with a lot of equity. So the market is what it is. Don't get surprised by it, and don't react to it. Know the facts and then make decisions known on current facts. And what's happening in Orange County, Anaheim Hills is not what's happening in Corona, which is 20 miles away. Definitely not what's happening in Texas. So when you hear these guys, oh, market's crashing, they don't tell you that they're talking about Timbuktu where the market crashed 30%. It's not nationwide. They won't tell you that. So they are telling the facts, but in a deceptive way. I know because I've seen their videos. They say the right things. Legally, they say the right things, but they're saying it in the wrong way.
Yeah. Deception.
They want you to feel the market's crashing, but they don't tell you that, hey, I'm talking about this town in Montana where the price of home came down 30%, but they don't tell you it's nationwide. They make it sound like nationwide.
Right.
The rates dropped by 0.25%. Oh, guess what? Rates are crashing. Well, it's only 0.25%. It's a relative term. What does crash mean? Well, it did crash from 7 to 6.75. So legally they're right, but it's deceptive marketing, deceptive perception out there. So be very careful when you hear those guys, or they're out there making money at your cost. So,
yeah.
All right. With that, we'll call it a day. Kevin, thanks a lot for coming on this thing. I hope I can call you again and share your thoughts, maybe another 6 months or 4 months or whenever you're ready. Call me if you want to come on. And for you watching, I really appreciate it. If you're watching on my channel the first time, thanks for coming. Do subscribe, make comments. And if there's certain topics you would like to hear, let us know. Just comment and we'll do that. So we'll see you on Tuesday at 5 p.m. California time. Thanks, everybody.
Thank you.